Okay, good morning, everyone. Welcome to another episode of the Crypto Hour. Today, Friday, the 10th of July. And again, it's another week where I would say we have more to say about political activity than economic activity. It's at the moment, obviously, the new attacks between the US and Iran are dominating the news and also are bringing uncertainty into the markets. So let's go and start looking from there first, just to give an idea of kind of like where what has been happening and what has really dominated the investment world over the last 7 days. Now, there are a few things there to talk about today. There It's been a volatile week for crypto and for Bitcoin that had reached a new low for the year, but at the same time has shown some resilience and some bouncing back ability, if we can use that word. Is showing that there is some institutional buy the dip activity. So as the market is hitting new lows, what's happening is that the big buyers are coming in and pushing the price back up because they see that they are buying at a good price. From the macroeconomic point of view, we had both the NFP, the non-farm payrolls, has been released, and we'll look at that in a second. We also had the minutes of the Federal Minute Committee that were putting an end to the possibility of a rate cut, but with almost like a 50-50 split, with just a little preference for hiking the rates before the end of the year rather than lowering them. So as an effect, risk assets, including not just crypto but also precious metal, took a hit, and also what looked like the Bitcoin recovery showing stalling a little bit. So going forward, on the positive note, there is like the IMF, International Monetary Fund, released a report about the global economy, in which highlights global growth projected at 3% for 2026. Flat in terms of growth rate, but I'd say we managed to keep this rate, which is fairly quite positive, driven largely by the investments in AI infrastructure. We also have capital flowing back into crypto, so we're starting to see some positive numbers in Bitcoin ETFs inflows, and also July, as indicated, is the start of the really strict application of the MiCA regulation in Europe. So, and we're seeing as very quickly Poland is emerging as a key market gateway for payment systems, integrating stablecoin settlements and Web3 infrastructure for kind of mainstream businesses. So this is starting now to get real. Okay, it's got real businesses getting involved in cryptocurrency. So not necessarily cryptocurrency businesses developing these products then to be used by the actual traditional businesses using this infrastructure now to do their normal thing. Looking ahead, there's going to be quite a bit of volatility next week as we have inflation, CPI inflation report, and also like major bank earnings are going to be released, like JP Morgan and Goldman Sachs. And also we have PPI on the 15th. And especially the CPI, will tell us, so the inflation figures will tell us if there is still pressure on interest rates, or if kind of the case for raising interest rates maybe can take a little bit of a back step and maybe move on to maybe not being implemented straight away at the next meeting, but then remain on the cards, but as a possibility rather than a certainty. Okay, so let me share my screen. Let's reflect this. Okay, so first thing, just looking at the week that's just finishing now. We see New Zealand has again raised interest rates, so we confirming the trend now of kind of for the moment at least to control inflation. The interest rates have stopped falling for the majority of the big economy and are actually starting to push back towards slightly higher rates. And we see in Australia increasing interest rates, the euro as well, increasing interest rate, Japan, and now New Zealand as well. So obviously that's not great news for all of you with mortgages, with loans, because it means less money in your pocket if you got unless you got a fixed rate. But generally speaking, for the economy, means that monetary tightening. Okay, so not too great news. So on Wednesday we had these meetings of the Monetary Committee, and we saw that the market reacted quite strongly to that. And on top of that, obviously, we have the as we're saying, the hostilities resuming between the USA and Iran, which doesn't help forming a safe place for investing. Now, so going forward to next week, as I was saying, what's going on? There we are. I say going forward to next week, on Tuesday, we have the CPI numbers. So then again, it's not so much that the numbers will be particularly worrisome or great in terms of inflation figures, but it's because like overall picture that we have from the US with the job market and inflation could push interest rates one way or another. Also, we have the rate, central bank rates from Canada, and then we've got like where is that? The PPI as well on Wednesday. Okay, so we have Tuesday and Wednesday like two big announcements that are related to inflation, either at the consumer end or the producer end. Okay, so both of them can give us an indication of where the pressure is laying for the Monetary Committee for the US. Now, on another side, so we're looking at what happened last week as well. So going back to when we were meeting last Friday. If you remember, we're talking about the non-farm payrolls. Sorry, on Thursday, Friday and Friday, because of Friday was a bank holiday because of the 4th of July in the US. So the job announcement was quite weak. So only 57,000 jobs were added to the US economy against an expectation of 114. So almost like half what the market expected. So this is one reason why the Fed may not want to raise interest rates, because they have to support the job market as well as control inflation. So raising interest rates could obviously control inflation because it puts more pressures on people's pockets and anybody that borrows funds, whether it's a individual or a business, would need to pay more for those funds. But also, on the same time, if you raise interest rates, it means that there is less incentive to hire new people. And so we got this sort of balance between inflation, and we'll see the inflation figures next week, but also with the job market, they're showing signs of weakness. Okay, so the two things will play out, and we'll see what the market thinks of it, because at the moment the market has repriced from a easing market conditions to tightening market condition. So anything that pushes against that, maybe what we could see next week is a dampening down of inflation figures, because obviously before the resuming of the hostilities, here the oil prices have been coming down steadily to price levels that were seen before the start of the war. So that would be reflected somehow in the inflation figures. If that, maybe if not this month, definitely in next months. So we can see if I bring you a chart of, just give me a second, give me time to load. So if we see the price of Brent crude, go to a daily chart so we can see what it was like before the war. Why it's being quite slow today, but here we are. So you can see here in February, as price jumped from the kind of around 70 to 72, where it was at the time, all the way up very quickly. In about a week, went up to over 110. Okay, now as you can see, last week, so Wednesday, Thursday, Friday, it was hovering at that price between 70 and 72 again. Okay, now we start seeing some signs on the price pushing up again, because of nobody knows what's going to happen long term in the Strait of Hormuz, and when they're going to stop throwing bombs at each other. So we have almost added another, like when that news came, as you can see here on Tuesday, we added almost 10% in 2 days, more than 10% to the price of oil. Okay, but we still now at $75, which is a lot lower than the $100 and above that we had in between March really and beginning of June. So now you can see in most of June and this little part of July that's already gone by, prices have been now much lower. So if we look at it from the 12th of June, which is now pretty much like a month ago, prices were like going to the low 80s, and then again towards the end of June we're going into the 70 and low 70s. So this price action will eventually translate into the price of goods in the shops. Okay, so we're here between March and June, we had all this price action here that put a lot of pressure on inflation numbers. Okay, now as you can see, we are outside of that, and so a lot of the pressure is being released. Obviously, it takes a little while for this to translate, into price of oil first, and then the oil is used in production, and then so that lower cost for production, so eventually lower cost in the shops. But it doesn't happen overnight. It's a process that takes a couple of months to play through. But still, we'll see the first signs of this probably in the inflation figures they are released next week. So if that is the case, and we see, go back here. So you see the expectations. So the previous numbers that we don't have expectations yet. They haven't quite been published. But we can see that last month we were like a 2.9%. We'll see in a few days what the when the market forecast is published, at which level we will be. But at the moment we are running a 4.2%. That was the last number of yearly inflation. So if we can get even just a slow turn, as you can see over the last few months, February, March, April, May, and June, we won 2.4, 2.4, 3.3, 3.8, 4.2. Okay, even a slightly turning around, below 4% would be a positive sign that takes some of the pressure off immediately raising interest rates at the end of July meeting. Okay, so I'll say this kind of the market will be generally waiting for these two announcements, in particular the CPI. So there's going to be like quite a bit of volatility next week. But then, following these two numbers being released, the market will settle down depending on what's announced with new expectations for the coming months. On the Bitcoin side, let's bring that up. Sorry, let me just remove all these drawings. So you can see here on the 24th of June. Sorry, where am I? This is silver. Why am I on the silver chart? So here on the 1st of July, so Wednesday of last week, we actually saw Bitcoin make a new yearly low. And so that touched at 57,800, which is the new low. Although we couldn't sustain, so this is like the good thing, like what is showing you that where the market is believing. So this was the previous low. Okay, in June, like the week before, that managed to first of all at the beginning of June, and then on the 24th of June, this is where the market made another push, but you can see they couldn't sustain, so it didn't close below the previous low. So that's almost like a sign that there is demand there. There is demand there. They will seize this level as a good value purchase. And as you can see, after touching, creating a new low, we had 1, 2, 3, 4, 5, 6 days of continuous grow that went from 57 to 64,500. But that is not, when you look at it in percentage terms, it's quite low. So it's over 10%, 11.7%. Okay, in 1, 2, 3, 4, 5, only less than a week. Okay, but then since then we are going up and down because obviously the political uncertainty and but as we can see, again, after the drop of Tuesday and Wednesday, when we had the news about the Iran and the US resuming hostilities, again we found some new wind that's pushing the price in what seems to be the right direction at the moment. So we're back at above 64,000. As I told you guys before, like at the moment the downtrend is still dominating. So this is the immediate downtrend that we have at the moment. It's this. Okay, so until we manage to get over this point, the downtrend is still dominating. Okay, and this is like the immediate downtrend. But when you when we look at we look a little bit further out, and just I cancel that out. So this is the first point of interest. So I'm thinking, well, to even think about talking about any sort of reversal, first of all, we need to start taking this point out. Okay, we're moving above 67.5. But really, so this is the trend, the long trend move. Okay, so this is the long-term trend that started in October of last year, since we made a new high. Okay, so really to talk about Bitcoin actually now being in an uptrend rather than a downtrend, let's make a different color. Let's make it green. We talk it again, breaking 82,000. Okay, in that case, going above 82,000 would invalidate this current downtrend. Okay, so we're still at the moment quite a way away from that. So you can see how far away. We're not even ready yet to take out the immediate downtrend. They're still about 5% away. Okay, now having a quick look at the Bitcoin ETFs. Let me just have a look. So we can see here that on the 2nd of July, so kind of last Friday, as we were having a call, as the first funds they started flowing back in, and again Monday and Tuesday were still positive numbers, then followed by the last couple of days, which again the hostilities resuming have been slightly negative. But at the moment, we had four days out of 5. We still have a positive balance for the week. So we got roughly 280 minus 170, about $100 million flown back into the Bitcoin ETF, and that's really the only really one that's Bitcoin and Ethereum that got some serious volume behind it. But we can have a look at the others as well. So you can see at the moment it's not just Bitcoin here, but also we've got Ethereum ETFs, Solana ETFs, XRP ETFs, Hype ETFs, so Hyperliquid. And these are just the ones that are reported. So there's more crypto ETFs now available on the markets. Simply they're not that they kind of results are not mapped by CoinGlass. But if we have a quick look here, you can see similar things for Ethereum, like Thursday and Friday last week. Then we had like 3 days positive this week. Yesterday negative again. Solana, similar things here, but obviously it's much smaller numbers. So we had a couple of positive days last week and 3 out of 4 this week. But really, when you get the Wednesday numbers away, it's pretty much wiped out the positive numbers for the whole week. So we pretty much like break even for Solana this week. XRP again, there were some positive numbers last Friday. This week, nothing much. You see the volumes are so much lower. So just like one entry. So I've been 3 days out of 4, no movement whatsoever. So it's not like not very liquid ETFs at the moment. And the last one, so this is the last one to be added. The Hyperliquid ETFs has been one of the success stories of this, during this bear market. Because why it's been a success story? Because it's one of the things that's being used widely. It's being trading for crypto, and so it's something because trading can be done whether the market goes up and down, and Hyperliquid has taken the majority of the traffic for that. So they're seeing also quite an interesting influx of funds. So we see here, compared to the others, neutral numbers yesterday, but last week, Thursday and Friday, and 3 days of this week have all been positive numbers. So out of all the ones that we've seen, this is one of the ones with the, more positive returns. Sorry, let me just log into my account. Excuse me. Okay, so this again, since the numbers have been hovering around the 60,000 mark in Bitcoin, does have an effect as well on the realized price, which peaked at around 56,000, now is back at about 53. Okay, again, as I told you guys, I take this as an approximation of generally where the bear market sits, and normally is within a band at that point. So if you calculate around like a 10% band around that, the bottom will not be that far away. So that would probably indicate a range between 58,000, and we already touched that at the upper part. So that could already represents the market bottom. We don't know, or we might have 10% the other way. That would take us into the mid 40s, mid to high 40s. So I use this chart pretty much to indicate how is the moving, almost like bottom of the bear market. Okay, and that's what this represents is the average price that's paid for any Bitcoin the last time it moved. Okay, and that includes coins that have been moved for 10 years plus, and include coins that have been moved in kind of July this year. The average of that makes this line basically, and we can see how that in time, how that line has changed in value. So that was the realized price only to we say July 2024 was at 30,000. Okay, so it means that the average the last time in 2024 the Bitcoin moved, the average of that was 30,000. So that means that below that price, the average Bitcoin holder will be holding Bitcoin at a loss. So at the moment, even with all this drop, the average Bitcoin holder is holding Bitcoin at profit. Okay, around 11,000 profit on the average Bitcoin. So you realize why this can represent almost like the bottom of the market, because people then don't want to sell at a loss. They're more likely to panic sell to protect their gain than actually be willing to sell a Bitcoin for a paper loss. And that's why every time that we've had bottoms have been close to this line, close to this range. But so that also tells you, when you're thinking about investing in Bitcoin and cryptocurrencies, that also is telling you how it is changing in value over time. So you're thinking, is Bitcoin an investment, a good investment or not in general? That will tell you that the difference between, on average, January 2024, we were at 22,000 on average. Now we are 53,000. So like 1.5 times, we more than doubled the average realized price for Bitcoin in 2.5 years. Okay, and you can see as just obviously this will have, it's not just one directional. So there will during the bear market, it will actually drop a bit, but generally speaking, it is going in one direction. So you know that over time, this is how value is accumulated into a product like Bitcoin by people agreeing. So this is every time that one Bitcoin is sold or bought, a buyer and a seller are agreeing that that's the right price. Otherwise, the exchange wouldn't happen. Okay, so over time, what this is telling you is people are agreeing, buyers and sellers, that Bitcoin is worth more than it was worth a year ago or 2 years ago. Okay, now, so going back in time, I use this because if you zoom out, you really see these trends quite clearly. And often we are guilty of paying too much attention to what happens now and not enough attention what happens in a larger time span. Because I believe that we are now, I mean, this is still an early stage product, early stage investment, but I believe that this is going to make such a big difference in our life that can be compared to the introduction of the personal computer or the mobile phone or this sort of like revolutionary technologies. And the growth rate has been outstripping the growth of all these technology that we had in the past. So including personal computer, including the internet, including the mobile phone, including the smartphones, because it's a different thing, completely different thing, a smartphone from a mobile phone. So the growth rate of crypto in general has been outstripping all of this. But obviously, it is still a very early stage product because we're getting closer now to market adoption. And this is why guys, I'll bring you example from the news every week because it shows you how this technology is being adopted. But as we're moving towards the mass adoption, then big numbers bring bigger volumes. Okay, and whatever happens, whether the price goes up and down, volume in cryptocurrency also generate fees. So Bitcoin or other currencies being used for whatever reason, it increases the value of the product as a whole. So it is important to notice this thing. I don't have too much to show you today in terms of news, but I've got a couple of in one thing in particular. So where is the other one? Where is the Poland one? Sorry, guys, I'm just trying to locate my.
Look, a current question. You're saying about the price. Yes, it's going up because of things that happen. Do you think that more has been turned over as well as people that hold older coins because of the cost of having to do it because now what they're earning is so much less. So naturally, as things move, there's been more turnover of old stuff, old coins.
Not necessarily. Well, you could see it that way, but if you're looking at something like Bitcoin, you can say yes, there is less profit on paper, but this is if you're thinking about if you bought it at 50,000 and now at 60,000, yes, that could make sense. But if you bought Bitcoin at $500 or $1,000, it's still a huge capital gains. So the kind of like what they call it, the whales, the early adopters, they're not really selling Bitcoin at all. They're just borrowing against it. They use it as a collateral, and that's a very tax effective way of using it as well because you don't pay any tax on loans. And you can realize the value that you accumulate in your Bitcoin without incurring taxes. So I mean, this is one of the things that I want to show you here. Now, you know that we were talking about launch of the Robinhood chain last week. Now that is already accumulated over 80 million in total value locked, 200 million in stablecoin, and as other volume already in DEX volume, so decentralized exchange volume, over 800 million since launch. Okay, so we are looking here at one week of activity. So you see why last week we were talking about the importance of something like Robinhood of getting involved in crypto because they bring huge volumes to that. So the fact that they've launched, so they haven't done it just by allowing people to buy and sell cryptocurrency out of their app, which they had already done, for months before, but they actually launched their own layer 2 chain called actually the Robinhood chain. and they've gone fully DeFi. So they allowed people to use this out of decentralized exchanges. And you can see like how much clout they bring to the crypto world. So this is why I bring it to your attention, because it is important to realize that size matters in a way. And if you got users, and if we get product and projects that bring with them millions of users to the crypto world, that is good news for everybody involved in crypto. Not necessarily you have to think about it, who is it good for? Is it good for the Robinhood chain token or something, if there is one? Is good for the whole of the crypto industry, because the more users come into crypto, the more they are likely to look beyond the project that introduced them to crypto for the first time. Now let me just see. There we are. The other thing that I wanted to show you is this. Now with the launch of Mica, we are also that we know. So we know that we were talking about the legislation in the US that is going through Congress. There hasn't quite been approved yet. What is called the Clarity Act. So this happened in Europe already last year, and now the July the 1st was the date where there is no leeway anymore, and these rules need to be applied. And so now companies know exactly where they stand. And there are some places rather than others that have moved early and making that a reality. And Poland has been, like, again, in general, it's been a success story in Europe for their whole economy, but also for their attitude to innovation. And this shows that also how they have allowed things like non-custodial crypto payment gateways. Businesses can now use services like that introduce real put together RealFi and DeFi. And as I say, crypto payments gateways in Poland now provide stablecoin settlements, recurring payments, SEPA payments as well. So that means payment from between crypto and banking, fiat payments, integration with API keys, and so on. So Poland is basically creating just a key market for crypto payments, and more businesses are then using crypto gateway to sell products to the public. So they don't need to know, all the technicality of this. So that is what the payment gateway does, but that makes it possible for them to be at the avant-garde and take crypto in the day-to-day business. So so many service providers, they have been licensed in the EU can operate in Poland, and also local Polish firms also continue to register as virtual asset service providers. So it then helps businesses feel more comfortable when choosing a payment provider. So these are some of the services that are available. The first one is BoomFi, which is again a crypto payment gateway infrastructure with a Polish entity. And again, it is a virtual asset service provider in Poland. So this supports Ethereum, Polygon, Solana, Arbitrum, Tron, and BNB chain. That's to begin with. Then more blockchain networks will be added later. So what does it mean for merchants? They can accept payments, subscription, invoices, and billing based on usage, but where they receive payments in however they want, in euros or any currency they like, and the customer can use crypto on the other side. You see, BoomFi allows users to settle payments in any cryptocurrency, including stablecoins. Okay, so the merchants can take fiat currencies or cryptocurrencies, whatever they choose. Another one, SpectroCoin. So these are a few that you may or may not be familiar with. So this is like an Estonia-based company that serves customers into the whole European economic area. So it's not just a payment processor, but also they offer exchange services, digital wallets, and even kind of like Visa debit cards. So they accept Bitcoin and other cryptocurrencies. And also they use I mean, if you are in Europe, you wouldn't know, but SEPA are basically instant payments that you can use within Europe. So they can also have integrated this with instant bank payments or bank transfers between European countries for quick euro settlements. So you can see the services here about crypto payments, crypto exchange, digital wallets, credit cards, and kind of like instant almost bank transfers. So then it can be integrated through the API key for normal e-commerce platform. Then there's another, maybe we'll just go quickly through the others as well. Paymaster, which is a non-custodial stablecoin payment gateway. And this is where it accepts USDC and USDT stablecoins on these blockchains. So Ethereum, Base, Polygon, Arbitrum, and BNB chain. So these are the blockchains they are used, but it is just designed for stablecoin payments. So at the moment it works on USDC and USDT. So the money goes straight into the merchant's wallet. Okay, so the company Paymaster, never keeps any of the client's money. They charge us a flat rate of 1% for transactions, which are generally speaking lower than credit card rates. And there is no subscription or minimum requirements or spread of Forex or something else or minimum processing amount. Is a straight USDC or USDT payment. Okay, no monthly cost benefit. So you can see how it can be. It makes it very easy for merchants as well to accept, because they know their cost up front. So it's just like 1%, and they can compare it to cost of taking payments in other ways. We'll have a look at also BlockB. Okay, specialized crypto payment gateway. So again, it is non-custodial. It means that the merchant receives payments directly to the wallets. So now it offers 70 different cryptocurrencies. So this is one of the most popular ones. And the fee varies depending on transaction volumes. But it goes between 1% and 0.25%. So even connects to like plugins that are used for online business, like WooCommerce, that is used widely across e-commerce platforms. And then there's the last two is like a Mercurio and PayPilot. Mercurio is a fiat to crypto payment solution. Okay, so basically it enables businesses so customers to acquire cryptocurrency via fiat methods. Okay, users can buy 70 different cryptocurrencies via debit or credit cards, or things like Apple Pay or Google Pay, bank transfers, and other methods. And we know that the troubles that you guys have had in Australia over the last few weeks in transferring money between banks and your crypto exchanges, so that can ease that pain. So it would be kind of like, by the way, have a look. I haven't looked into if this is available in Australia, but it is available in 150 different countries and supports 25 fiat currencies. So it is quite likely that it's available in Australia as well, but just Australia and New Zealand. So but look it up. Just remember the name Mercurio with a Y. And the last one is PayPilot. So again, combines crypto payments, a wallet, and a card service. So business can accept crypto payments and perform instant swaps, or they can store cryptocurrency, okay, which is in the form of Bitcoin, Ethereum, USDC, USDT, or Euro in multi-currency wallets, and also allows users to open Euro IBAN accounts for immediate bank transfers. So you can see how this is getting into. So you need this sort of the reason why I wanted to spend a little bit on this is that you need this sort of infrastructure to bring the masses to crypto. And once you have like mass usage of these products, it doesn't mean that everybody will use crypto, but it means that it's going to be another easy way. Like it took years and years to get people used to using credit cards for their payments rather than cash. And it's the same, it will be the same thing for crypto. The fact of making it available makes it more normal. Okay, and when something is available, sooner or later somebody uses it, increases the numbers, and when they see the benefits of this, then they carry on using it because it's easier than the other way, or cheaper, or more convenient. At the end of the day, the end customers doesn't care that it's crypto or not crypto. They just want something that works quickly, gives them added benefit. That's the reason. So there's a pain in using any new service. So to overcome that pain, you have to have an incentive. If you got enough of an incentive, then that will work. If you don't have enough of an incentive, people generally don't bother. So having this infrastructure is again, is not step one, it's step already 3 or 4, but it needs to be in place to make it available for everybody. Because for you to make sense to have crypto in your wallet is the fact that you can spend it wherever you like. If you just have crypto in your wallet because they say, well, I hold, so much in crypto, but you can do anything with it, it doesn't have a lot of appeal attached to it. So let me just, I think I've, spoken enough for about almost an hour. So let's see what people think. Anything that you guys want to ask or you want to add to this will be welcome. Anybody?
Morning, Luca.
Hi, good morning. Morning, John.
I was just thinking about stable coins in particular, and it seems almost ironic that crypto came to sort of free us from the pains of the dollar and the mighty dollar and the major fiat currencies. But actually, the first thing it's probably going to do is just bring a one-to-one replacement for it to the masses. And that all the talk I've seen lately seems to be around stablecoins and new services, including involving stablecoins. It's it's an interesting thing. There's one called RealFi, which is from Charles Hoskinson, and they've got a call this morning, actually this afternoon. I'm going to jump in on and see what it's all about. But they're offering a yield bearing stablecoin opportunity, which is interesting. So it's not like the payment gateways that you were just talking about. They'll take a 1% fee, which is far lower than the banking infrastructure, the settlement layers. But then also we've got the ability within DeFi, because it has this flow of funds in, to create yield to give people as well. So that then replaces the bank interest that we're all have bank accounts for. So it's a slow but steady replacement of all the key things in the bank layer, it seems.
Yeah, but the way I see it is that when you're launching something new, obviously it's easier if people can use something they're already familiar with. So it's easier to say, well, you know that, yeah, you're using this thing that's digital rather than cash, but it is the same thing, really. So it's still like a USDT or USDC, they're still like worth $1. So people understand that. And I think once you made that step and you made the step into just people being used to using their own wallet, and we've seen obviously it's not just crypto, but people are used to using, PayPal and other online payment providers like this. Then I think that is like the next stage will be, okay, you know what, you've been using this stablecoin, but you know that there's like we can do the same thing with an algorithmic stablecoin, that provides the same value, keeps the same peg. So, but first of all, you need to get the numbers up for, I think these stablecoins, in total, stablecoins obviously are growing massively at the moment because it's a very, very good, from the point of view of the provider, a very simple business that can make them lots of money, because at the end of the day, they are taking people's money and giving them like a token, but they can use that money to generate yield. Now, at the moment, they're not sharing, as you were saying, they're not sharing it with you, but they are making it. So kind of like the Tether and Circle of this world are making lots of money out of the funds that you deposit. But I think the way you're saying, obviously Charles Hoskinson being slightly different, it's looking at how can you then share this with the community, with less of a cut of what's already happening by businesses like Coinbase and others that allow you to stake the stable coins for a big chunk of the yield, so to speak, But it's I see like it's like the first step that needs, unfortunately, it's like a necessary evil to get into this new way of doing things. But yeah, to begin with, you need to give people a way of relating it to whatever they know, because it's fine. We are being in crypto, we've been used to doing these things, but for somebody that's never done it before, I'm thinking, what is this thing on my phone or whatever that I can use for pay? How does it mean it goes up? One day is up, one day is down, especially as the volatility for most crypto coins is still very high. And we need to get to the next stage where, so we've seen it with Bitcoin, like every cycle, the volatility goes down. Now it's getting more and more, more and more stable as the usage is increasing. But it will still quite difficult at the moment still to use it as a payment solution. And as a business, for example, what you do, you pay your employees in Bitcoins, then 1 month, it's equivalent to a wage of maybe, I don't know, $5,000. 1 month is 2.5. It's it's a bit difficult to make it make sense. But I think once we've gone through and people are used to using mainly stablecoins for their purchases, then it's like one extra step that's a lot easier to take. Yeah. So I don't know. Then maybe I'm kind of like I like to see a glass half full rather than half empty. Hopefully.
Yeah, well, you mentioned algorithmic stablecoins. I think that's the real goal. We need one digital token that represents the most stable asset in the world, because it's an average of everything out there. That would be ideal. Move the power from select individuals who decided who were first to create a nation state that was worth most in the world, or whoever's got the most guns. Move away from that into something that's just maths based would be very cool.
But yeah, I can see that we are making the right steps. We're making the right steps. It's just like probably a lot slower than we like, that we would have liked. But things will take the time that they take. And at the moment, it's almost like we found this like AI, the scam in the picture that's taken the shine in a way where everybody and we've seen a lot of capital rotation going towards that massively. So yeah, but that, like everything else, it will come down. But it doesn't mean if something is growing faster than you are, it doesn't mean that you stop growing. The reason why crypto maybe is moving faster than the mobile phone is a cash cow at the moment. The same for, the same with the internet. There's still massive things. It's not that they stop growing, but there is like, a new star basically is growing faster. But I think that crypto has reached the critical mass to ensure they will carry on functioning as a technology. Yeah, and then the value that we, that people will give it will depend mainly for how much it is being used. How much value it generates.
Yeah, my son's just buying a mobile phone. First one he's buying for himself. So he's looking at the budget, and for a budget entry phone, it's like 230 quid. Compared to me entering the mobile smartphone market, trying to scrape together 1,000 for it's just a matter of time. It's a waiting game. Prices will come down, all the assets will be sorted out. But with crypto, it's different. It's not a commodity product that will get cheaper over time. It's cheap from the get-go. It's just cheaper to do things with crypto than it is with the traditional rail. So we'll see what adoption is like.
Interested to see if any of the like US phones, like Solana was producing a phone that can give like Solana rewards immediately. I'm wondering if any of those will come to our shows as well.
Well, yeah.
Could definitely make a lot of people more interested in crypto if they start getting free cryptos because that's they own a particular phone.
Yeah. I've heard Elon Musk mention phones several times because he doesn't like Apple and he doesn't like Google, funnily enough. So,
he doesn't like it, just he wants a piece of the pie.
Yeah. Maybe we'll get free Doge with a
maybe
Elon
maybe
phone.
we'll do. Anyway, guys, I'll need to go now because I've got another call starting shortly. But yeah, I wish you all a nice weekend, and we'll catch up with you again next week, same time, same place. And in the meantime, go and see Jonathan's session if you can, because that will be enlighten you even more about the reality of crypto in the modern world and what it can do. Concentrating on obviously Cardano, but not just Cardano, but it's Midnight and other things nice, and all things nice. Okay, so I'll see you again next week, guys, and speak to you later, Jonathan. Okay.
Yeah.
Bye, everyone.
Thank you.
Bye-bye.
Thank you.